Hi guys, welcome to Pivotal Trails. I hope you all had a wonderful expiry today and you are waiting for some of the videos where you can learn upon what knowledge you can take away and what can be learned from today's expiry. So in the morning we had three possibilities based upon the type of opening we will encounter, and we saw that the pink line, which is denoting the gap down opening, was the possibility which should be looked upon, and we depicted that the market that the bank nifty would close in between something around 35,980 and 35,612, to be very very specific. So let's play it out and see what was our performance of the published idea. So you can see that we performed really well today, and now we'll be looking upon the price action and what was the reason behind this move. I have made a replay, so let's replay it slowly and see each and every price action bit by bit. So you can see that the price opened gap down in the morning. As soon as it opened gap down, it started recovering some of the gaps which it created. So we can see that after just finishing up the gap, it did created a downward move, but there was huge demand on the lower side, which can be seen from the size of the wick created on the lower end, and thus the following candle was attempting to break this black line. This is our flagship line where we always advertise it as a black line, the savior, the soul maker, and the messiah for all the trades which you can take upon. And this black line is the line where in the history, in the past, in the recent past, the bank nifty has been trading at the most. Okay, so let's play it out how it performed near the black line. So let's play it out and see. So you can see that a quick reaction was created on the this candle at 9:45, and it tried to break that, but the immediate follow-up candle did not allowed it to do so. And this was the case throughout the day, that it rejected the crossing over of the black line, and took a lead towards the downward spiral. And here I will be telling a very important aspect that would be on the 2 minutes time frame. We can see that this pattern which I created was on 2 minutes time frame. Price did break from this range, and it did showed us the indication of upward move is there from this point to the upside. But you can see that the immediate candle busted all the prediction about it, and a follow-up candle really signified that the rise is not easy and the fall is the case which will be going upon. And side by side, what was going into the multi-strike OI analysis is that you can see from here that from the morning itself, the 36,000 CE was at the top, and 36,000 CE remained consistently to be written by the big players, and it did not encountered very large downside move. And whenever there was a downside move, it was across the strikes. As you can see, it was across the strikes, and this maintained its legacy throughout the day. And if we remove this 36,000 CE, then we see a plan where the red line, which is denoting 36,100 CE, consistently made higher and higher ends, which also reinforced our idea that 36,000 and 36,100 would be a very strong resistance point, even if the price attempts to break that. And we saw what was the reaction near the black line, and you can see that the puts were already being not interested by the big players, and it was maybe attempted by the option buyers for a case to be looked on the downside, but uh, it was not the case for the option sellers. So this was going on side by side on the multi-strike OI analysis. You can see that the price did attempted to break on the upside from this triangle, but it failed, and it also made a second attempt, which came back to this level and tried to break that, and it did try to take some resistance at this point. You can see that the initial balance which was created around this level was respected throughout the day. This initial balance was respected throughout the day, and you can see that the price, whenever it attempted to come on the upside, was immediately rejected, even though the size of the candle was big enough. So this move, which came at around 12:30, was in sync, where you can see that the heavy call writing was already taking place, and there was no sign that of retrenchment from the heavy call writing by the big players. And that was the case throughout the day. That's why you can see that this up move was not maintained enough and not supported by the big players, and thus this retracement back and the follow-up candle on the downward side was the play to be looked upon. So let's play it further. So you can see that it tried to break the red line which we marked upon, that if the price comes to this level, it should shoot up and close around this level. Okay, so we already crossed 230, and this option trading is all about exiting your all the trades before 2 o'clock, before 2:30 at the most. But you can see that the kind of strategy, kind of support and resistance which we identified made Bank Nifty to expire within the range, and so much so within the range that it expired exactly around the level which we denoted in our published idea. So this is the kind of conviction of the option trading is. You don't care about the movement. You take two strikes, you create a strangle, or you create an iron condor, and then you let the trade run itself. You don't manipulate. If the price is coming down, you buy additional puts just to hedge and to make this range go little downward and to make your break even wider. So the thing is, the option selling makes you calm, composed on expiry day, and let you be. If we take the midpoint of this 35,800, and then we look at the straddle of 35,800, let's see what was the case happening. 35,800 straddle. So if you would have shorted 35,800 PE and CE in the morning, then you can see you should have started from 446 rupees, and it should have closed, if we're not talking about the 3 o'clock movement and 2:30 movement, it would have closed around 150 rupees. So you can imagine 300 points movement. So this is huge. So this is the kind of expertise in option trading is, and I hope you all learned a lot from this video. Take care. Bye bye.